first panelist is the financial architect behind one of India's brightest success stories, the Waaree Group. Abhishek Pareek is the Group Head Finance at Waaree Group, India's largest solar module and cell manufacturer with a market cap of over 1 lakh crore. A CA, PhD in Business Management, and MBA from IIM Kozhikode. Abhishek brings over 17 years of experience in corporate finance, treasury, investor relations, fundraising, M&A, and strategic finance leadership. At Waaree, he has been instrumental in driving large-scale equity and debt funding, complex structuring, IPOs, and strategic acquisitions, strengthening the group's position as a global clean energy leader. With his deep expertise across renewable energy, capital markets, and strategy, Abhishek continues to play a pivotal role in powering India's energy transition through financial innovation. Welcome, Abhishek. A rare blend of global perspective and homegrown wisdom. He is the calm eye in every market storm. Our next panelist, Mr. Sunil Singhania, is the founder of Abakkus Asset Manager Private Limited, one of India's fastest growing asset management companies with an AUM nearing 40,000 crores. Abakkus is now set to expand into mutual funds, marking another milestone in its journey. Previously, the CIO, equities at Reliance Nippon Asset Management, Sunil managed $11 billion in equity assets and built a stellar reputation as one of India's leading fund managers. Recognized by Outlook Business in 2016 and 17 for its consistent long-term performance. A CA and CFA charter holder himself, he is the first Indian to have served on the global board of the CFA Institute USA and currently serves on the IFRS Capital Market Advisory Committee. His leadership and insight continue to shape both Indian and global capital markets. Welcome, Sunil. Now, what do I say about our next panelist? The man who chose India as his Karambhumi when he could have made any part of the world his playground. Manish Kejriwal, founder and managing partner, Kedaara Capital. Manish, your journey truly speaks for itself, and if I were to recount it in detail, I'll be eating away the panel's time, so allow me to keep it crisp. Kedaara is one of India's most respected and successful homegrown private equity firms, managing over $6 billion in assets. The firm combines the strength of an experienced local team with the global expertise of a strategic partner, Clayton, Dublier, and Rees. Under Manish's leadership, Kedaara has backed and built several market-leading businesses across sectors, from consumer and financial services to healthcare, technology, and industrials, always anchored on trust-based partnerships with visionary entrepreneurs. Before founding Kedaara, Manish established and led the India office of Temasek Holding, where he was instrumental in deploying over $4 billion of capital in India. A career that spans McKinsey & Company, the World Bank, Goldman Sachs, and Temasek. His journey embodies global excellence, rooted deeply in the India's growth story. Welcome, Manish. Our next speaker, Mr. Vishal Sharma, is the Executive Director and CEO of Godrej Industries Limited, a business that sits at the heart of the $6 billion Godrej Group and is today a leader in oleochemicals, surfactants, biotech, serving customers across 80 countries. Vishal brings over 2 decades of truly global experience, having lived and operated across 5 continents in both strategic and operational roles. Before joining Godrej, he spent a decade at Ecolab Inc., leading businesses across India, the Middle East, Africa, and Asia-Pac. Prior to that, he spent 12 years at Diversey, where he ran 4 global verticals and drove several transformational initiatives. He began his career with GE, and over the years has been known for scaling businesses, driving innovation, and building high-performance teams. Welcome, Vishal. The man who built an empire brick by brick, quite literally, from prefab walls to cooling every Indian home. Our next panelist, Mr. Sanjay Singhania, is the co-founder and group managing director of the EPACK group of companies, a fast-growing Indian conglomerate operating across 3 business verticals with 13 manufacturing plants spread across the country, employing nearly 7,000 people, including staff and workers. The group companies have 3 major verticals: EPACK Durables, it's a listed company with 3,800 crores of market cap, and the second largest ODM of room air conditioners in India. The second company is EPACK Prefab Technologies, a company that got listed just earlier this month, a market cap of 2,400 crores, and EPACK Petchem. The company has also done various JVs, underscoring its strategic partnership and diversification. Sanjay also currently serves as the VP of PHDCCI and is slated to assume the role of president in 27 and 28. Welcome, Sanjay. When it comes to global credibility and care, Revati has the edge. Join me in welcoming our moderator for the session, Ms. Revati Kasture. Revati is the CEO of CareEdge Global IFSC, bringing over 25 years of deep expertise in credit ratings, financial research, and cross-border business expansion. A seasoned leader, she has been instrumental in steering CareEdge's evolution from a domestic ratings agency to a truly global institution with a growing footprint across India, Africa, and Nepal. At CareEdge, Revati leads the global and sovereign ratings business while also overseeing policy development, corporate ratings, and strategic research initiatives. Under her leadership, the company has launched pioneering platforms such as CareEdge Knowledge Center and the CI3 workflow system, further strengthening analytical depth and digital capability within the organization. A chartered accountant and cost accountant with All India merit ranks, Revati combines technical rigor with strategic vision. She exemplifies purpose-driven leadership, blending analytical precision with a global outlook as she continues to position CareEdge at the forefront of the international credit rating and research landscape. She was also among India's top 100 women in finance and Professional Achiever Women Award by Indian Institute of Chartered Accountants of India. Welcome, Revati. Over to you, all, panelists.
Hello. Yeah, so thank you so much, Arunima, for the generous introduction. And I'm so happy to be a part of this illustrious panel. I hope that we can have some meaningful conversations today. So good evening, ladies and gentlemen, and welcome to today's panel discussion, which talks about business value versus market valuation. It's a very a topic which has tension between itself, I think. So in theory, market valuation should reflect the business value of a company, the capabilities of a company, its assets, its future potential, and all of that, right? But we often see a disconnect between the two. Now, take the example of a food delivery app in India, with when listed was at a loss. It's about trading at 1,000 times PE. You contrast it with a large Navratna PSU, which has steady profitability, amazing cash position, trades at less than 10 times PE, and sometimes less than book value. Nvidia was a stock often spoken of today, which touched 5 trillion valuation, larger than India's GDP, trades at 51 times trailing PE. So we have, all of those in a kind. Now, today we'll explore this, aspect of business versus market valuation through the eyes of all these stalwarts present over here. So my first question, let's dive into the conversation, because we have, we're standing between dinner and, all of you. So I'm cognizant of that. So the first question is to Sanjay Singhania. And here, Sanjay, you've been a first-generation entrepreneur. As Arunima mentioned, you've actually, done a brick-by-brick evolution of your company and, a successful listing too, recently. So how do you look at this aspect of business value and how do you communicate that to the shareholders?
विजय केडिया जी ने पहले यहाँ पे स्टार्टिंग में रिदम की बात करी थी. So like drawing inspiration from him, I can tell you that जो business value जो है ना वो एक physical object है और जो market valuation है वो एक परछाई है. तो market valuation के पीछे अगर भागेंगे हम तो तो वो जो एक जान है ना, जो फिजिकल ऑब्जेक्ट है, वो टायर होके मर जाएगा, है ना. So as a first gen entrepreneur, like I firmly believe in business value, because it is much more deeper as compared to market valuation, because like it's a sum of, in our case in manufacturing, it's a sum of like capacity, capability, credibility, and the culture of the company. And as you said, like we are in a very competitive manufacturing space, and like any small or slight change in the pricing strategy, or for that matter, any financial optic change, is not going to create value. The value is going to be created through, like long-term sustainable performance, through reliability and resilience of the company. So, like as a business owner, I believe that the real value of a business is in three things. First is the strength of the balance sheet in terms of, like resilience and the operational strength of the company to be able to, like deploy cash effectively. The second strength of the business lies in the ability to manage the relationship with the employees, the suppliers, the customers, the financiers. And in the third strength lies in the, especially in our manufacturing, it lies in the ability of the company to adapt to the technical challenges, the government and environmental challenges, and like domestic and global competition. So like when we look at all these things, I think it is important to communicate to the markets, what all challenges we are facing and how we are going to resolve that. Like, so if there's a clarity in the communication, if the timing of the communication is clear, then markets do always, like support the company. So, like this is the way I would narrate my take on the business value versus the market valuation.
So get more transparency in your communication.
Definitely,
That's what
yes.
you're saying.
Yeah.
Okay, great. So my next question is to Vishal. And Vishal, I'm sure in your long tenure, you would have multiple occasions where you would have to make a strategic decision that favored long-term business value versus short-term valuations. I mean, if you can remember any instances and what are the outcomes of those, if you can just, elaborate on that.
Sure. So while I'll share a couple of examples, I think